Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and with me Shail Bhatnagar, and this is Market Today, a show where we'll help you understand how the day is going to be panning out for trade. Remember, yesterday is when we actually saw the Nifty open gap down, but as the day progressed, we did see buying happening from the lower levels, and in fact the Nifty managed to close at the high point of the day and also just about flat in trade right here. And of course, we've recovered 200 points intraday yesterday. And for the July FNO series, we are up 400 points as well. So the second consecutive series where we ended positive for sure. The Nifty Bank was the pressure point to which actually, corrected about 1400 points over the last three trading sessions as well. So that's been the pain point. We'll just have to see whether that recovers going forward from here or not. But we also need to see whether the strength in the markets that was seen yesterday towards the back end will continue in trade today, and will we see bulls coming back into action. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. It's Friday and thank God for it. Sakshi, two important points I'd just like to highlight before we start our conversation on where the markets are headed. Today is 26th of July 2024 and we celebrate the 25th anniversary of Kargil Vijay Divas. This is the instance when the Indian Armed Forces threw back Pakistani intruders on the line of control on our side in Kashmir. And this is really important to highlight for two reasons. One, it is because of the armed forces that people like Sakshi, me and the rest of us watching this channel, and of course the entire Indian population rests easy, does it works and sleeps peacefully. So from Business Today's side, from our team members, this is a remembrance that we offer to our armed forces, those who gave up their today for our tomorrow, and of course the markets. I was a reporter at that point of time looking at the Nifty. Sakshi, in April and May of 1999, the Nifty was 1000 points and it fell about 7, 8, 9% once the intrusion came into the picture. And for 2 months, which is April and May, the markets were down when the level of intrusion was detected, and of course after initial setbacks the markets started recovering, and by end of July, which is 26th of July, we were not only back in the green but we were substantially higher. So from 1100 points to 24,000 points in a span of 25 years, Sakshi, that's been the journey of the markets. Remember, when there is a war, after the first 5 or 7 days, look at the index and start buying. So that's the other lesson as far as the markets were concerned. But let's get back to the picture, and as usual we'll start with our daily dose of the Nifty chart, which I'm sure you, all of you, are now very familiar with. 24,400 is something that the bulls have won back from the bears as far as the last day of July's FNO expiry was concerned. Sakshi has mentioned that the index added about 1.5%, 1.6% in the past 22 trading sessions, and they were beyond volatile. So if you look at the Nifty yesterday, it has ended 7 points lower, and for the past 5 sessions the index has lost somewhere in the vicinity of 450 points from its all-time high of about 24,859. The beauty of yesterday's trade, ladies and gentlemen, was buy the dip. The Nifty rested very strongly at about 24,200, which happens to be the 21-day exponential moving average, and it was tested, and it was tested well, and from then on you saw a very decent bounce back. What you see is a negative number down 7 points is actually Nifty closing at its day's high, especially on expiry day. That goes on to show the strength of the market as far as markets are concerned. Even now, the Nifty is in a consolidation phase after hitting record highs. For the last 5 sessions, we've lost ground somewhere to the vicinity of 350 to 400 points on the Nifty alone. Liquidity-led buying is the major reason why you see this resurgence of bulls at lower levels. They are protecting 24,200, 24,100, especially 24,000. Remember, 24,000 has been tested twice in July. This was the budget day low, 24,074, and this is also the earlier low of 24,044, which was the start of the July expiry. So keep 24,000 in mind. In fact, if it slips below 24,300, then buy on dip no longer works. Sakshi, we've had a new set of stocks now helping the Nifty upwards, which is Tata Motors, which is BPCL, and of course ONGC has been the star of this month, up about 23% at a record high. Yesterday the ONGC shut at about 335 rupees. Now what will be watched today? Sakshi will give you more details, but keep an eye out on Tech Mahindra. Phenomenal set of earnings that have come in from this company. Profit after tax is up about 29% for the quarter gone by, quarter on quarter, and you've seen a very sharp flat sales, almost 1% higher at about 13,005. Very strong order build up, rise in margins, rise in EBIT. So this is something that we'll keep on looking at. And of course you have 4 Nifty stocks which are going to declare their earnings: Cipla, IndusInd Bank, Power Grid, and Shriram Finance. Shriram Finance is the second worst performer on the Nifty for the month of July, down about 8%. IndusInd Bank is down 5.8% in this month. Power Grid up a modest 2.5%, and Cipla up 1.3%. So this is the background of how stocks have moved, and of course we'll see how the earnings pan out. Similarly, 5 earnings coming in from the F&O space. The major ones are Indigo, City Union Bank, and Bandhan Bank. Ladies and gentlemen, the rollovers as far as the Nifty and the Bank Nifty have been less than average. That essentially shows that probably we are headed in for a consolidation phase which might last a bit longer, and it is only earnings that will now drive momentum. The major event, which was the budget, is now behind us. Let's get to Sakshi. She will tell you what happened on Wall Street, and more importantly, the FII number for yesterday is of extreme importance. Sakshi, how much have our foreign friends sold?
It's 2,605 odd crore rupees as of Thursday, so that's something that we'll watch out for. But remember, this is right after the US markets recovered partially from those 2 days of rout. This was after the US stocks, US economy grew at an estimated 2.8%, annual rate from April through June. This is double the rate of the prior quarter. This is stronger than estimate GDP figure, although the US markets ended mixed. So the Dow Jones up by about 0.2%. But the S&P 500 and the Nasdaq also declined by about 0.5 and 2.3% respectively as of Thursday. Now, as far as the Asian markets are concerned, remember they rose on the Friday morning session as better than expected US GDP data firmed investors' expectation of a rate cut from US Federal Reserve coming in September. So the Nikkei was about 0.3% higher, 0.4% higher in trade, and we did see the Kospi up by about 0.5%. The Hang Seng up by 0.5%, the Shanghai just about flattish with a negative bias in trade. As far as the GIFT Nifty trends are indicating, they're indicating, a higher start for the Indian markets, just about 30 odd points. Just as I said, FPIs have offloaded worth about 2,600 odd crore rupees in yesterday's trade. The domestic institutional investors, however, have stayed net buyers for the 3rd consecutive session. They've mopped up equities worth about 2431 odd crore rupees in shares as of yesterday. What we'll also keep an eye out on is several stocks that have come out with their numbers. So I'll quickly read them all. Adani Energy came out with the numbers right after the market hours. Revenue up by 47%, EBITDA up by 43%, margins at 41.7% versus 42.9%, so slight downtick there. But when we look at the company's bottom line, we've actually seen a net loss of 1,190 odd crore rupees versus a profit of 182 crore rupees. This is led by an exceptional item of 1,506 odd crore rupees in the current quarter. Now, Tech Mahindra also came out with the earnings. Consolidated QOQ numbers show revenue up by 1%, EBIT margins at 8.5% versus 7.3%, net profit up by 28.7% at 851 odd crore rupees. AU Small Finance Bank, that was the other one that came out with the earnings. Standalone YOY numbers show NII is up by 54%. We've seen the net profit improve by 30%, and we've also seen that the gross and the net NPAs have actually come in slightly higher than the previous quarter as well. Now, as far as Jupiter Wagons is concerned, remember the stock has been on a one-way rally, and right after that, we've actually seen the numbers come in. Consolidated YOY numbers show revenue up by 16.8% at 880 crores. EBITDA margin up by 15.5% versus 12.8%, so an improvement there. And the net profit is up 46.2% at 92 odd crore rupees. So good set of earnings from that one. Praj Industries consolidated year-on-year numbers show revenue down 5%, but net profit up 43.5%. Cyient came out with the numbers. Consolidated QOQ numbers show revenue was down 9.9%, EBIT was down 25.7%, net profit down 25% as well. Now, the other one is Home First Finance. Again, standalone YOY numbers show total income up by 31.4%, while the net profit is up 27% for this one. Ramco Cements, that came out with the consolidated YOY numbers. Revenue down by 6.8% to 2,094 crores. EBITDA down 6.8%. We've also seen the margins are flattish at 15.3% as well, and the net profit was down, however, 50.8%. So that could be exerting some pressure right here. Mahanagar Gas, another stock that has been doing well prior to the earnings. Q1 FY25 standalone YOY numbers show revenue improved just by 1.5%, and the EBITDA rose 6.3% for the company. The net profit also up by about 7.4% to 285 odd crores. We've also seen United Breweries come out with the numbers. Consolidated YOY numbers show revenue up by 10.8% to 2475 crores. Net profit up by 27.5% at 173 crores as well. DLF's numbers show revenue slipped by about 4% on a consolidated YOY number at 1362 crores. Net profit, however, improved by 22.5% to 645 odd crore rupees as well. Go Digit General Insurance. It's important to see this is the first quarterly earnings post listing of the company. Total income up 24.6% at 2,077 crores, and the net profit up by 73.3% at 101 crore rupees as well. There are several other stocks in news beyond the earnings as well. So Mankind Pharma will be important to watch out for. The company will acquire biopharma firm Bharat Serums and Vaccines for 13,630 crores as it aims to strengthen its position in the women's health and fertility market segment, and that's going to be extremely important. SJVN has received a huge order worth 13,497 odd crore rupees from the government of Mizoram for a completion of pumped storage project. So that's going to be another stock that I'm going to be keeping an eye out on, Shell.
Well, Sakshi, this is also the time to welcome Mr. Kiran Jani, Head of Technical Research at Jainam Broking. नमस्ते किरण जी, स्वागत है आपका. फ्राइडे बहुत 5 दिन हम लोगों ने वॉलेटिलिटी में निकाले, और ऑफ कोर्स जुलाई वाज अ वेरी डिफिकल्ट मंथ. आई एम श्योर यू हैव गॉन थ्रू रोल ओवर डेटा, यू हैव गॉन थ्रू every single technical analysis that can be done of the past 22 trading sessions. Now please tell us, where do you see the strongest rollovers amongst stock futures, and then we'll talk about Tata Motors.
Yes, very good morning everyone. So we have seen a very volatile session, and honestly speaking, the starting of the July month we have seen a very steady rally post election, and everyone is expecting something very drastic change in budget. However, budget become very normal, and as a citizen of India, definitely the budget is very strong, and we have showcased that we are focused on growth and development. So due to that, we also see that even after budget, we saw some correction, but again we recovered on same day. Somehow yesterday's correction is something we can digest as an overdue corrections. Reason being, we have already seen a very good rally from 23,000 to 24,800. We outperformed overall world indices also. So now this overstretched rally is there. Fundamental is also looks overstretched, definitely on PE front, or if we can look at other fundamental aspect also. So this correction is very much overdue. Now coming back to the technical analysis point of view, we are seeing that market is taking support. I mean, I'm talking about Nifty. Nifty is taking support of 20 days moving average, number one. Number two, 24,500 become make or break level. We are seeing since July month, the put writers was holding a very big open interest on 24,500, and that's the reason the entire July month market is just hovering around 24,500. Even on expiry day, we seen that market recovered from lower level and expired near 24,500 level. Now for new expiry, this level again become a very important level. If today market settle below 24,500, then we can expect this price correction or this fall to remain continue, and we can expect some downside also. So we are a little bit cautious. If market is not crossing 24,500, 24,600 level, then our view is sell on rise, or maybe at least you keep your stop loss lower level somewhere around 24,100, 22,000, 24,200. If that juncture is broken out, then we can expect prices to retest this 50 days moving average, which is 23,550. So I'm repeating again, if you are holding any long position, keep very strict stop loss somewhere around 24,100 to 200 range. If market crosses 24,600, then we can expect this rally to continue. Otherwise, we can expect market to fall down. If it's break 24,100, then we can expect 23,550. Coming back to the bank. Back to the Bank Nifty. Bank Nifty is trading at support. Bank Nifty already retested its 50 days moving average, which is 50,600. Now at 50,600, we can see the pole exit day high was 50,100, 51,200. Now that's become important support for Bank Nifty as of now. So for Bank Nifty, 50,500 is not broken out, and if it is sustained above 51,200, then we can expect some smart recovery on Bank Nifty. Otherwise, on Bank Nifty, the weakness is already shown. So keep a very strict stop loss below 50,500 for any of your longs, and don't just chase any gap down as of now. So we are a little bit cautious on index perspective.
Okay. Let's also welcome Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill India, on the panel with us. Good morning to you, Mayuresh, and thank you so much for taking the time out. Well, the budget fine print now seems to be digested quite a bit. You tell us, since you're joining us right after the budget, how have you assessed the knee-jerk reaction of the markets to the announcements that were made in the budget? And what's next for the markets from here on? Will it be back on the course, earnings, and focus on the fundamentals yet again? Or is there going to be some more pain to be had?
Morning, Sakshi. Morning, Shail sir. Morning, Kiran. So I think, again, it was not expected, right, the STCG, LCCG. So I think the markets did have a shock in terms of the announcements made at that point of time. The markets are still trying to grapple with the fact on the announcements that have been made, specifically in terms of the equity-related instruments. Also, the real estate indexation benefits going off, the periodicity of holding, the expectation in terms of the return that your legacy asset has given, and the area that you're operating out of, along with some news articles that I was just reading through, where stamp duty might get excluded in the basic cost of calculation of long-term capital gains as well. So I think that is something which is still very patchy at this juncture. So clarifications on these fronts, and I'm pretty sure industries will raise their concerns as well. So I think the markets are grappling with this fact, Sakshi, very honestly at this juncture. If I go back to 2018, when for the first time LTCG was introduced, the markets had not corrected much for the first couple of days. And then I think there was a significant correction that we probably... So I'm not saying the same thing will get repeated, but you have to give it some time, specifically for the broader markets and the overeating that you're probably seeing. On top of that, we have to grapple with geopolitics. There is the US election over the next few months. Inflation largely seems to be under control. So the economic indicators are largely looking like in control. There is a Fed meeting in the coming week. Any indication thereof in terms of a rate cut, either in this meet or the next, might just give fillip to global markets as well. But geopolitics and grappling with the current scenario is something that the markets will go through in the next few weeks. Post that, I think markets will revert back, as you rightly said, on how earnings are expected to be. And a base case scenario is a 12% earnings growth. Again, Indian markets are not cheap, not very expensive, and therefore I think you need to be extremely choosy and picky when it comes to sectors and stocks.
Good morning, Mayuresh, and a very warm welcome to you on Market Today. I see that the clean-shaven look has come back again, and this is, I think, what is the cause of volatility on the Nifty. But again, extreme liquidity. This is a joke between Business Today and Mayuresh. Till the time he keeps his goatee, the bull market will keep on running. But Mayuresh has this habit of testing lower levels on the Nifty because he wants to buy quality stocks. So sometimes he sort of shaves it up. Okay, Mayuresh, now 3-4 days have lapsed. You've done your mathematics, you've done your homework. Now tell us two winners that have come out of this debris that is the national budget, and where exactly do you find value at current levels?
So valuations are stretched, Shell sir. So I think very honestly, I think very few pockets left where valuations are something that can be a comfort factor for the markets. But I think a couple of areas. One, our belief is that with the kind of capex spend, and there is another 6 months down the line, another budget expected to come through. I think waste, water management, roads, highways are expected to have a large prominence in terms of how the Modi government will move in the next 4 to 5 years. And therefore, one stock out of this, I mean, a lot of analysts might have discussed BTTV, Wabag, and the likes. Our take is that Welspun Enterprises becomes a perfect mix. Any declines on this one, if it pulls back to its 50 DMA, I think becomes a perfect candidate. 77% of its revenues comes in from the water segment, specifically from the EPC segment of water. They're also into waste management. They've got a couple of projects as far as water management is concerned in the Bombay area as well and outside Maharashtra as well, which gives them a huge opportunity for the space and the spending that is expected to come to 3.3 trillion rupees for urban water infra, 70,000 panels, and therefore they are appropriately placed and they have been making the right strides. 35% comes in from roads, and that too EPC roads, where margins are relatively higher considering either EPC or HAM. And therefore, I think an appropriate mix of both roads, highways, water, waste management is something that Welspun Enterprises is reflecting through its numbers. They've got a very, very strong order book at 12,200 crores. And therefore, the expectation in terms of strong earnings delivery, which is measured to our EPS rating, can very well continue. Debt-free balance sheet, they've got almost 900 crores of cash. And to top it, they've also forayed into the oil and gas space. So they've done a few JVs with the Adani Group, where the first exploration might come through in Q1 25, which means there is an added impetus in terms of overall consolidated earnings. So to that extent, I think this segment should be on investors' radar. Welspun Enterprises is something where declines investors can look at. The other space, continuing in terms of how the digitalization efforts are expected to take place. We've heard a lot of announcements in terms of support that is expected for SMEs, MSMEs. The angel tax has got abolished. There is huge employment opportunities for a lot of youth across industries as well. And therefore, e-Mudra is something that we believe where the digital fiber, where the digital infrastructure of the economy is expected to shape up humongously over the next few quarters. So one of the largest certifying C agencies in the country at this juncture, with their flagship product, eSign, is something that has got well accepted, not just in the Indian markets, but markets like America and Europe as well. And therefore, I think our expectation in terms of a very steady state growth, being the backbone in terms of digital fiber, digital infrastructure, e-Mudra is something where numbers can still continue growing at a good pace. Obviously, foraying into the international markets, their margins have come down a tad bit, but they're foraying into markets like Latin America and Africa as well. And management fees 30 to 31% is something that can manage. Healthy balance sheet again, no debt on the books. And to top it up, I think the other line of business that they've got is cybersecurity, which is going to be extremely critical as well as we head into the next few years. And as digitalization takes place, cybersecurity is one of the pillars which will create a huge impact for enterprises and retail users as well. Steady state numbers in terms of earnings growth, margin delivery, and therefore return ratio should show steady improvement going forward as well. So our take is Welspun Enterprises on declines, e-Mudra, and the facades that the government is going through. These stocks can benefit from it, earnings momentum and earnings momentum.
All right, we're just 30 seconds away from the yeah. Yes, Shel, please continue. So just wanted to take one quick stock from Kiran.
We'll pay attention to the pre-open. Yeah. Please go ahead.
Kiran, your top stock for the day.
So we have two stock which we are highlighting today. One is the IOC. If you look at the daily chart
only 10 seconds for you, Kiran.
Okay. So IOC is our first week. Looking at current market price, we are expecting prices to retest 195 with the strict stop loss of 169. So it's not an intraday call. You can expect some 2-3 days holding. Another stock, it's a contra buy, which is Bajaj Finance. Bajaj Finance is trading somewhere around 600. We would like to go long for the target of 6720 and with the strict stop loss of 6600. So Bajaj Finance and IOC both are our buy call.
Got it.
Okay, ladies and gentlemen, we have the pre-open rates upon us, 19 points lower on the Nifty, and this is the Friday mood as far as markets are concerned. I'll focus on how the index heavyweights are moving. Surprisingly, there's a 5% downtick on HDFC Bank. This will improve for the better, don't worry. It's not going to open 80 rupees lower. TCS 1.65% higher, 71.50. These prices are going to settle down reasonably well. Okay, I'm looking at L&T, 12 rupees higher, 36.32. This is a stock that you need to pay attention to. A stunning set of numbers came in about middle of this week, and the counter has responded very, very positively to that. You have a strong move coming in on Bajaj Finance, 18 rupees, 47 rupees higher at 66.95. Remember, this has been a negative stock for quite a while in terms of overall performance. Let's see how it goes amongst the very few stocks in the Nifty which are below 200-day moving average. Tata Motors is something that is accelerating, 20 rupees higher, 1110. Remember, this is a record high. This is a stock that I wanted to check with Kiranji, and we'll do so shortly. Tata Motors is the best performing Nifty stock this week. In the last 5 trading sessions, it's added 12.3%. And needless to say, this is a record high. What's Infosys doing? 5 rupees lower, 1820. This is how the index heavyweights have moved. You have a 20-point uptick on the Nifty, 24,428. That's primarily driven by this move that you're seeing on Hindustan Unilever, 43 rupees higher, 27.50. ITC 2.5 rupees higher, 492. Let's get into FNO. I'd just like to see what Tech Mahindra is doing. This is a stock that I just want to keep an eye out on you. It's right there in front of you. What is also moving? Indus Towers, 441, 3.8% higher. You have Shriram Finance ahead of its earnings, 1.7% higher, and very quickly we'll go to NSE 500. It's a blowout on SGVN, 10% higher, 156. Remember, there is a 12,000 crore rupee order that SGVN has won from the government of Mizoram. Mankind Pharma 4.6% higher, 2243. News that it will purchase Bharat Serums for about $1.2 billion. It's a fairly good move. Let's get Kiranji into the conversation. Kiranji, take it away on Tata Motors.
Some very good upmove on Tata Motors. Tata Motors retested its previous resistance of 150, 140 previously 2 times, and every time we have seen that prices made that resistance level, and from that level we have seen some fall also. Yesterday comfortably prices has closed above those level, number one. Number two, after that close we can see the volume is also higher than the average 20 days volume, and secondly the derivative data is also very promising on Tata Motor. So at current market price or any dips towards 1070, 1080 would be the great buy. Keep a strict stop loss of 1040, and looking at overall chart pattern we can expect price target of 1150, 1140 in short time. So definitely Tata Motors looks very good at current market price.
Let's get in Mayuresh into the conversation. Mayuresh, I wanted to get a sense in the pharma space as well as Mankind Pharma with you, with this new acquisition that will be underway. They want to buy Bharat Serums and Vaccines for 13,630 odd crore rupees to strengthen their position in the women's health category. Overall, pharma has been showing some strength. Where does Mankind Pharma stand from here on?
No, so I think the acquisition probably fits in their product profile. Yeah, I think the kind of launches that is expected, I think the management sounds very, very sanguine in terms of that. So I think as a disclaimer, we continue holding the stock in our global portfolio. At this juncture, I think the stock that we probably like within the mid-cap pharma space is Morphin Labs. I have spoken about this a couple of weeks back. our take is that the health product segment that Morphin has, and they've got a very strong leadership in terms of glucose monitoring and BP monitoring as well. As lifestyle diseases are expected to keep on increasing, which is not a good sign, but apparently that's the trend. The product sales on the medical equipment part is expected to multiply quite handsomely over the next few quarters. And the best part about this business is the kind of annuity income that they get because of the strip sales after they sell the product itself, which is far more of a cash flow after the initial product is sold. They've also got the API business, six very, very strong APIs which generate cash flows, and the management is very, very hopeful of more APIs getting launched in the next few quarters. So yeah, I think it's a hold on Mankind. Disclaimer, we hold that in our global portfolios. We like something like Morphin Labs. Disclaimer again, we hold this in our domestic portfolio.
Okay, another stock that Mahdesh I'll ask you is from the insurance space again, because insurance space has been buzzing over the last 1 week, 10 days odd across the board, public and PSU ones. Go Digit has reported fantastic set of numbers. This is the first set of numbers that they have come out with after the listing as well. How are you looking at Go Digit vis-a-vis the entire insurance space, where you think there is more value to be had today? It's indicating an opening of 8% higher.
So frankly, not tracking Go Digit, Sakshi, honestly, but within the life insurance player, SBI Life has always been our top pick. If you look at the parameters, right, the product mix, when you talk about protection plans, participation, non-participation, the expectations of a stable product mix is something that will continue doing well for SBI Life. A lot of other players, including HDFC Life, ICICI Pru, have introduced new products. Specifically on the protection part and the annuity part of their business. But I think there is a lot of upfront expenses, both in terms of commissions as well as operating expenses, which should get spread out over the next few quarters. The value of new business margin has remained largely stable, should show steady improvement going forward as well. The operating expenses for SBI Life is one of the lowest. It's around 6.4% compared to higher double digits for most of its peers. Embedded value and EV to embedded value, it might be a tad bit on the higher side, but the bank assurance with SBI itself, an expectation of stable growth, our pecking order remains SBI Life right at the top, followed by ICICI Pru and HDFC Life. On non-life, ICICI Lombard is in the private space, fabulous set of numbers, and our expectation is they will continue to grow at a decent pace. They are digitalizing a large part of their businesses, so the cost of acquisition and the cost and the operating expenses in general should start coming down. So SBI Life in life, ICICI Lombard in non.
Right. Mayuresh, another view on NTPC, as also ONGC. In fact, the entire pack as far as the PSU energy basket is concerned. Two of our very close friends have launched NFOs in the energy space. One has 10,000 crores, the other has 8,000 crores. So where is this money going? What would you prefer? What would you prefer they buy?
So Shelson, I think very interesting. If you probably read the oil minister's statement a few days back, he clearly mentioned that there might be a $60 billion to $80 billion kind of an investments in the oil and gas E&P space. Now the key beneficiaries are obviously going to be Sarkari companies, whether we like it or not. And therefore, I think the entire expectation in terms of ONGC or Oil India, the kind of well drilling that can probably takes place with the capex spends that the government is expected to do. And the government clearly is focusing in terms of the cubic area meters as well, in terms of square kilometers. So we've almost 10% in terms of our explorable reserves. The government wants to take it to 1 million square kilometers, which is 16%. So I think this space will remain in focus. Oil prices are expected to remain stable within the range. OVL for ONGC in particular can do exceptionally well going forward. Expectations of more throughput, both in terms of oil, expected to be around 12,000 BPOED, and gas around 2.4 BCM should augur well. Dividend yield is around 4%. So yeah, the space looks very, very interesting at this juncture. The second rung stock, Shell, something like a Ceylon exploration on declines is something that investors can look at. Similar story playing out. They've got wells at Bakrol, they've got wells at Garjisan, where drilling has started. The volume throughput has started increasing at a humongous pace. Q4 was an indication of that. And therefore, as volumes increase quite substantially with a decent balance sheet that they probably closes on a 2% dividend yield as well, even the second run stocks like Ceylon should continue doing well. For downstream, I think HPCL is something that can continue holding up. as China recovers, downstream products should start showing steady improvement. And therefore, the downstream product pricing should start having a relatively better same consolidated numbers. The pipeline transmission and revenues in terms of EBITDA should remain steady. And obviously, the kind of cross investment should have a consolidated performance, which is better. Again, dividend yield holding out. NTPC and the likes, including midstream companies like GAIL and Petronet. Petronet gave a steady state number as well. Should have steady improvement as well. Renewables expected to increase substantially for NTPC over the next few quarters with not excessive leverage being built up. And similarly for Petronet, the capacities that they've built up on the East Coast, the pricing at which they're expected to procure the LNG at a lower element and lower base because of their long-term contracts. And the regasification dynamics should work in their favor as well. So yeah, I think energy as a space looks very, very interesting.
Okay. According to you, Kiranji, what would be the best energy stock within the PSU basket, as also if you have a broader choice?
We like oil exploration company. So IOC we already discussed, and now coming back to the private side, we like Adani Power and Tata Power in energy sector. If you look at both the chart price, the both chart is hovering or taking a support somewhere around the 100 days moving average. Coming to the Tata Motor, Tata Power. Tata Power has a very good support somewhere around 400, 420. And same level we can see 100 days moving average also there. Since last couple of days we are seeing multiple bullish candlesticks patterns are also forming. On momentum indicator we can see some bullish hidden divergence are also placed. So risk reward ratio is very good at current market price. Anyone can go long on Tata Power at current market price, which is somewhere around 420. Keep strict stop loss below 400 and we can expect price target of 500 in very soon. So Tata Power looks very attractive. Another stock which we discussed is Adani Power. So Adani Power already given a breakout at 600 level. After that breakout, we can see a very furious rally to 900, and from that level, it is again back to the 600 kind of a level. As of now, the stock price is 690. So not at current market price, but any dips towards 660, 670 would be the great buy. Keep strict stop loss below 640, which is the 100 days moving average also. Tata Power, you can go long at current market price, and for Adani Power, wait for some dip and you can go long.
Yeah, I think it's going to be metals that are going to be in the limelight today. Hindalco seems to be opening about 2% higher. The index itself is, indicative of opening at 1% uptick. Vedanta, SAIL, NMDC, Jindal Steel, Tata Steel, they all seem to be opening about 1% to 2.5% higher in trade. Kiran, metal space, is that looking attractive now? Will the sectoral action move there?
So as we are ahead about the Fed meeting, everyone is expecting rate cut, and for that reason, metals are again into the picture. We are already seeing that metals are into the downfall tick. If we discuss about the Nifty Metal Index, it is taking a support of 100 days moving average, which is somewhere around 9100. We already seen a very good rally from 6,000 to 10,000 on Nifty Metals, and during this rally, the multiple stocks has become 2x, 1x return also. So within the metal sector, the stock which we are liking is JSW Steel. If you look at the JSW Steel, it has a very good support somewhere around at current market price. Previously at 880, 890, we have seen some resistance. Post that resistance, stock prices fall down to 760 level. And after that recovery, the stock price made high of 960. So now again, stock price is available at its previous resistance. Now it's become a support number one. Number two, it is also creating some bullish reversal pattern on candlesticks front or on daily front and taking a support of 100 days moving average. The momentum indicator is also on oversold territory. So there are chances we can expect some recovery at from current level. So JSW Steel would be the preferred choice at current market price. Keeps the stop loss below 860, and we can expect a price target of 900, 920.
Let's get in Mayuresh ji into the conversation now. The IT pack, how are you looking at Mayuresh right now? We've seen now the second rung companies also come out with the numbers. Tech Mahindra came out with the numbers yesterday. Cyient came out with the numbers as well. Post the earnings again, the action has been lackluster or subdued on the markets. How do you see the IT sector really pan out from here, and what are your top favorite spaces here?
I think mid cap continues to remain in focus, Sakshi. Large cap, I think, will still wait out. As I said, they remain an attractive space. But second half is where the recovery will come through. Mid cap, we hold a few stocks, continue holding.
Ladies and gentlemen, we have the numbers in front of us. 16 points higher on the Nifty. Bank Nifty is in pain, 217 points lower. The IT index has opened 61 points higher, and the best among them all, NSE 500, the current benchmark of how markets are looking at in terms of buying the dip. The widest index that we have is up 1/3% at 22,997, almost 23,000 there. Now, what is coming? Let's just look at stocks that are making sense immediately, and let's look at the green ticks. Okay, Reliance 2.7 rupees higher, 2986. Infosys 20 rupees higher, 1845. Remember, Infosys is the second best performing Nifty stock this week, up almost 15%. What are the other stocks that are ticking in the green? You have TCS 24 rupees higher, 4346. HDFC Bank now 11 points lower, 1605. Let's look at Axis Bank, 6.5 rupees lower, 1169. How about ICICI Bank, 1188, 9 rupees lower. What is Tata Motors doing? 7 rupees higher. Let's look at the FMCG pack that has been providing support. Hindustan Unilever 2716, 10 rupees higher. ITC about a rupee higher, 490 rupees. That is how markets have moved. Two stocks that I'd just like to look within NSE 500. One is of course SGVN, taking it away, 10% higher, 156. This is the 12,000 crore rupee order that this hydropower company has gotten from the government of Mizoram. No stopping MMTC, 4% higher. This is the third consecutive day of a very sharp uptick. 125 is what MMTC is quoting at. What else is in the green? You have a strong uptick on Indus Towers, 441, 3.8% higher. Ashok Leyland is moving 3.7% higher. Let's look at the most active counters and see if there is anything interesting. Yes, it is SGVN and Tata Motors. Second most active traded counter on NSE today is SGVN, 262. Tata Motors, about 200 crores worth of transactions that have happened. Very quickly to you, Kiranji, would you want to step into SGVN 10% higher, or you'll stay away?
So honestly, we'll stay away and we'll wait for the today's price action reaction. No doubt that stock price is already opened above its previous resistance, which is somewhere around 150, 153. So that's can be a very good support to buy. So at current market price, we are not willing to buy. If anyone holding this particular stock, they can hold with the strict stop loss of 147. And for fresh buying, let's wait for at least today. There are chances that we can see some gap filling can happen today. And during that process, we can expect prices to fall at 150, 152 level where you can buy, and with strict stop loss of 147.
Okay, the 18 defense companies that we track are in the green. If you look at the railway space, there is a sea of green on Texrail, 2.5% higher, 283. Jupiter Wagons 1.6% higher, 636. IRFC 1.5% higher, 186.7. Rides, Railtel, Ircon, BEL, RVNL, all of them rising between 0.7% and 2.35%. One stock that we normally don't talk about is Fortis Healthcare, 526 for you. This one is moving fairly strongly in the green, and of course, as Sakshi had pointed out, it's the metal space which is doing very well. We track 16 metal stocks within the index. All 16 of them are in the green, led by Vedanta, 436.4, 1.25% higher. Remember, the board of Vedanta meets to look at its second interim dividend. Sakshi, what are you watching?
Start to the day for short for 24,460 now on the Nifty, and you do have barring say the banking index and the financial services, private banks, rest of the sectors are all opening higher. The Nifty metals at the top, 1.1% up in trade. The broader markets are doing well, with the mid caps now rallying up 2.8% in trade as well. It's Bharti Airtel that's now moved to the top spot as far as the Nifty is concerned. After a bit of consolidation, it's up now 2% higher in trade, followed by Hindalco, LTI, Mindtree, Kotak Mahindra Bank, Tata Steel Coal India. That seems to be the order of preference as far as the Nifty is concerned. SJVN definitely the mid cap top move mover today. Vodafone is picking up pace again today, 4% higher in trade. You also have Ashok Leyland, NHPC, JSW Energy, Emphasis from the IT pack, Bharat Forge, NMDC, Sona BLW Precisions carrying on the trade from yesterday. Tube Investments is up and about. A lot of exciting names now coming up in trade within the broader markets as well. Let's go across to Kiranji. Kiranji, first up, Bharti Airtel, 2.3% higher, 1482. Would you take the trade?
So coming to Bharti Airtel, looking at the daily price chart, it is in consolidation zone, but today's price action suggesting us the breakout from that consolidation zone. If you look at the intraday price chart, it is clearly showing that it was trading into the falling channel, and today that falling channel is also getting breakout. So on daily chart and intraday chart, both the chart is suggesting that there is a price breakout, price action breakout is there. So at current market price, definitely one can go long on at current market price. The momentum indicator is also in bullish zone. So keep very strict stop loss of 1460, and we can expect price target of 1520, 1540 in some time. So yes, Bharti Airtel can be the good trade at current market price.
Okay. Let's also get in Mayuresh into the conversation. PSU banks are now buzzing in trade, half odd percent, no 0.8% higher in trade for the index. SBI top mover, 1.1% high. IOB, Can Bank, UCO, Indian Bank, Bank of Baroda, all of those stocks are up and about in trade. Do PSU banks still give you that positive viewpoint right now, Mayuresh?
Yes, selectively, because I think there is still a valuation comfort and they are showing price strength as well. So I think it meets our philosophy in terms of both earnings and price action growing at a steady pace. And therefore, I think stocks like Bank of Maharashtra, as a disclaimer, which we continue holding in the global portfolios, we reported, I think, a stellar set of numbers. They should continue doing well in terms of their forward guidance as well. So yeah, I think PSUs selectively are looking good. But also have a look, Sakshi, since you asked me a question on PSU and the BFSI space. Housing finance companies, in my opinion, I think PNB Housing gave a stellar set of numbers yesterday. I don't know what the reaction of the stock is today. Asset quality pressures have come off quarter on quarter. In fact, they have done a strong recovery in the very small book that they've got on the corporate side. They have done a very strong recovery of almost 80 or 90 odd crores, and they have a nil NPA on their corporate book as well. Capital adequacy, specifically tier 1, stays in excess of 26 odd percent. And therefore, now the next target is that segment between 10 and 15 lakhs, because they've got sufficient experience now of dealing with that 30-35 lakh segment with very stable asset quality. They maintained their NIMs at 3.65% as well. So again, I think selectively on PSUs like Bank of Maharashtra, where we continue holding and liking that stock. But a few of these housing finance companies, PNB Housing, LIC Housing, can probably still continue their earnings.
Right, ladies and gentlemen, what we'll do is we'll take a detour into the broader markets. We track 19 indices for you. 18 of them are in the green. This is turning out to be a good Friday indeed. 1690 stocks are in the green, just 452 in the red. So the advanced decline firmly in favor of bulls on Dalal Street. Nifty is edging higher. 24,483. Remember, 24,500 is a huge supply point for both options traders as also as far as investors are concerned. They generally sell at that level, and you see a very sharp purchase that's happening in Nifty Bank. Remember, the low of Nifty Bank today was 50,450. From then on, in a span of 7 minutes, it's moved 400 points higher. The 21 EMA test on the Nifty is working very well. Let's see what Bank Nifty puts up. But again, things are painful as far as Bank Nifty is concerned. Mayuresh, very quickly, the best brand and the best balance sheet in the banking space, HDFC Bank just announced a 0.2 percentage price rise in the fixed deposits that they are willing to offer to us. What do you make out of this very strong fight that is about to be launched in the banking sector for CASA? Look at how Axis Bank is. Its CASA actually fell to 42% from 46% in the quarter that they just reported. What is your view on this one?
No, so I think it's a very classical story, right? Deposit mobilization is something which all banks are probably chasing at this point of time, and you're absolutely right. But let's have a little bit of a detour. If you open a FD and you're at the highest tax slab, you're going to pay 30% tax. If you hold the bank and sell it, you're still going to pay 2.5% more, but still 12.5% on long term if you hold it for a year. So those classical arguments in terms of whether you hold a deposit or whether you expect the bank to perform well over 1 year and that beats your deposit rate post taxation is something to be seen. But leaving that aside, my own sense is it will still take some time. HDFC Bank has given a stellar return over the last 3 to 6 months. They've already moved, it has already moved 25-26%. So it will consolidate. But I think investors who genuinely have a long term view, my own take is that synergies should start building up over the next 2 or 3 quarters, both in terms of cross selling opportunities as well as stabilization of NIMs as these cross-selling opportunities fructify for the bank as a whole, for the HDFC base that they will now be having having a go at as far as cross-sell is concerned. And therefore, I think synergies should start building up. It will consolidate, but long-term investors holding should continue holding. I think FY26 should be far, far better for the bank, what we've seen in the past few quarters. But within the large private sector banks, ICICI Bank is something that we still keep on holding in our global portfolios. And within the mid-cap space, sir, I think Karur Vysya Bank, stellar set of numbers. Our own sense is that the numbers will keep on improving at a good pace. Valuations are not very, very expensive, and therefore there is sufficient scope of earnings improvement, both through EPS, RS rating, institutional holding that we see in cancelling, that can show terrific improvement. So this is something that we continue holding as a clear disclaimer in our domestic portfolios.
Okay.
Mayuresh, the less said about the government's ability to take out every single drop of tax incentives that poor retail investors have had over the last 5, 7, 10, 15 years, the better. It's painful, but what can you do? This is how the cookie is structured, and this is how the cookie is. Let's hope it does not crumble. But within the FNO space, the gainers are Indus Stars 5% higher, Idea Cellular 5% higher, Ashok Leyland 4.6% higher. Tata Power is something that Kiran just marked 4.8% higher. And of course, you have a very sharp move coming into Bharat Forge, and the metals space is rallying, NMDC, Steel Authority, and of course Hind Copper. Sakshi, what are you watching?
And it's down 8.5% after the weak set of earnings, and of course the downgrade post Morgan Stanley's report, which has given an underweight rating to Cyient. Now they've cut the target price to 1550 from 2250, so sharp downtick on that one. So Cyient is down by about 8.5%. This is as a reaction to results and also the report as well. But we'll come to the IT space in a bit. Let's look at the kind of buzz that we're looking at. Kiranji, we'll have you first talk on the entire telecom space. Bharti, Indus Towers, Vodafone, Idea, MTNL, Tata Tele, they're all in the green. How should one go approach the entire telecom space right now?
So definitely post we have heard about the tariff rise in last month. After that, we are seeing that some attraction on telecommunication companies and the entire sector. So Bharti already we discussed at current market price. Definitely one can go long on Bharti. Another stock which we are like, and there is again a retailer's choice, that is Vodafone Idea. If you look at the Vodafone Idea's chart, the daily price chart. The daily price chart is suggesting that prices is taking support somewhere around 100 days moving average and 50 days moving average. Stock price has already given a breakout from a big downfall or a traditional falling trend line. With that on the weekly chart price, if you look at the price chart has a resistance of 15 rupees, 14 rupees, and from that level, stock price is also giving a breakout. So the multiple support is at current market price. The volume is also getting attraction. So percentage wise, stop losses looks very risky one. But looking at the daily price chart, definitely that risk can be taken off. So at current market price, anyone can go long on Vodafone Idea. Keep strict stop loss of 14 rupees. If 14 rupees is intact, then we can expect price target of 22 rupees in very short time. So Vodafone Idea looks very attractive at current market price. Again, please consult your financial consultant before taking this particular position.
Okay. Okay, got that. Shriram Finance has now picked up pace, 2.2% higher. Meresh, it was like one-way rally for Shriram Finance the moment it got introduced in the Nifty. But in the last 1 month or so, it's been consolidating. Again, buzz coming back, 27.35 for Shriram Finance. What's your thought process here?
Again, I think the exposure that they probably got in terms of the RBI directive that came a few months back, in terms of unsecured loans, in terms of unsecured advances as well, and personal advances as well, personal loan advances as well. I think it was very well covered on those fronts. Again, the management is very, very hopeful in terms of growing its book at a very healthy pace without much pressure on its asset quality. And that should reflect effectively in terms of their stable capital adequacy, the balance sheet strength that they've got, the diversified borrowing mix, reflecting in better NIMs going forward and better ROAs and ROEs. So I think as the rate cut cycle evolves, both globally and locally as well, large names like Shriram Finance, which have a better credit rating and a better borrowing mix, should benefit from a recoupment in terms of their NIMs and spreads. And obviously, I think the business outlook that they've put forward gives a huge advantage in terms of their leadership in areas that they operate out of. Therefore, I think this is one stock if somebody is holding should continue.
Okay. One stock, if you are holding on, you should continue. That's the word coming in for sure. Okay, LTI Mindtree is now picking up pace, 2.3% higher. Infosys is now picking up pace. Wipro is coming back in action, 1.5% higher. HCL Technologies, so IT space has slowly and gradually climbed up. Now 1.2% higher for the index itself. The IT is coming back in flavor. Kiranji, top IT stocks that you will continue to focus on today.
For the investment perspective, so definitely Wipro would be our preferred choice at current market price. If you look at the weekly chart price of the Wipro, it has given a breakout from very long-term falling trend line. Number one, on weekly chart also we are seeing that rounding bottom pattern is also getting breakout. Number three, on daily price chart, after the crash from 570, 580 level, the stock price is taking support of 50 days, 100 days moving average. Yesterday's stock price has made a bullish angleton candlesticks pattern, which is reversal pattern, and from that the following buying is coming today also. So at current market price, definitely one can go long on Wipro, or any dips towards 500 is again a very good level to enter. Keep strict stop loss below 480, and we can expect price target of 600, 650 in later part of this year. So definitely Wipro is on our radar, number one. Another stock which we are like, and you also highlighted this LTI Mindtree. If you look at the LTI Mindtree, the big rounding bottom pattern getting breakout, and with that we can see the cup and handle pattern is getting also breakout. The stock price has very good support, and it is trading above its all important moving averages. Momentum indicator is also again retested as bullish zone. So at current market price, you can go long on LTI Mindtree, keep strict stop loss below 5400, and we can expect price target of 6400, 6500 in near short term. So Wipro and LTI Mindtree both are our preferred pick in IT sector.
Okay, I think this is also the right time to look at the Nifty IT index. This is at the moment on the verge of a massive breakout. And is this an all-time high? Yes, this is an all-time high on the index, up 573 points at 40,635. Remember, ladies and gentlemen, this is amidst almost every negativity that you can think of that has been thrown at the IT sector. You know, no guidance, BFSI is not doing well, companies are not hiring, there is a slowdown in the US, and therefore Indian IT will be impacted. Now here is an index, despite all negativity, has made a record high, and the finest stock probably in terms of how the stock price has performed over decades is Infosys. Kiranji, coming to you, what are the charts of Infosys telling you amidst all this uncertainty within the Nifty? If you look at the week to day gain, Infosys is the top performer in terms of a rise of about 4% this week, and month to date, let's look at what Infosys has done. Yes, 18% higher. Remember, this is a blue chip large cap. Kiranji, medium term outlook on Infosys.
So as you discussing about the weekly chart, since last 5 week, we are not seeing any single red candle on time frame of weekly chart price. And as you mentioned, that is already being a blue chip company in last 5 weeks only, the stock price given a return of 20 odd percent. Because it has given a very long time corrections. If you check out the its weekly chart from 2022 March, the Infosys trading somewhere around 1900 level. From that level, stock price corrected towards 1200 level during somewhere around April 2023, and from that level, stock price has seen showcase a very steady rally towards the north side. Now coming to the weekly chart or a daily chart, stock price has a very big rounding bottom pattern breakout, and after 1.5 year of consolidation pattern, it is giving a breakout. So 1700 was the resistance, and now it's become a support also. So any dips towards 1800, 1770 would be the great opportunity to go long. If anyone holding this particular stock, they can definitely keep holding this stock. Keep strict stop loss of 1770, and we can expect price target of at least 1950, 2000 in very short time. So Infosys, being a blue chip company, already given a 20% return. So there are chances this stock again go in some of the consolidation phase. Otherwise, the overall start pattern is very strong. You can hold this particular stock or go long on any dip.
And Sakshi, what is really interesting, on Friday, we'll have a weekly close above 24,500. This is really, really important for two reasons. One, 24,500 has been a traditional supply for the market. And given the fact that the record high was 24,859 something, and from which we slipped testing 21 EMA, this is a positive look at how the Nifty is trading now 105 points higher. Let me try and isolate a call on the Nifty. Meantime, Sakshi, I think Bajaj Finance deserves your attention.
Yes, it's been recovering, and how I think from last few minutes of yesterday and again in today's trade as well. What else is moving is the real estate pack too. Kiran ji, how are you looking at the realty pack? 1.6% higher in trade right now. DLF, of course, post earnings, it's 2.5% higher. Sobha Limited, there has been a block deal worth about 865 odd crore rupees right there. About a 5% equity has exchanged hands. Oberoi Realty, Phoenix Mills, Macrotech, the entire space seems to be a buzz as well. Where would you go?
So overall, as Mayuresh sir has also highlighted, that indexation is gone away. So people were expecting that the real estate sector can have some corrections, because the reallocation of asset can be the chance. But looking at the recovery on particular shares, there are chances that we can expect some good amount of rally. So around all Nifty real estate stocks, we are liking Prestige Estate. If you look at the Prestige Estate, the stock price made a high of 2,660 somewhere around June, and from that level, the stock prices continue trading into the lower top, lower bottom pattern. It has retested its 50 days moving average, and after of 1.5 months of consolidation, it is started moving into the heart of high bottom pattern again. So at current market price, we are liking Prestige Estate. So one can go long at current market price, keep strict stop loss below 1800. And looking at price chart pattern, we can expect 2000 kind of a target in short time. So Prestige Estate looks good in Nifty reality.
Okay.
Okay, ladies and gentlemen, 9:39. I'm just requesting the PCI to fire the Nifty 24,500 call expiring on August 1st. Let's see whether we can show it on screen, and we'll get Kiranji's input on this one, sir. The most recent high on this particular call was somewhere like 520 rupees. Because the momentum is now towards the long side on the Nifty. Do you think this one makes sense for intraday at 157?
So looking at Nifty price chart has a resistance of 24,500, as we discussed earlier also. And the way the intraday charts of Nifty is showing strength, there are chances we can expect some price rise on Nifty price chart somewhere around 24,600, 24,650. So considering that price of move, definitely we can look into the Nifty call, which is 24,500 call. Expiry is the 1st August. Looking the 50 minutes chart of this particular call, the ascending triangle pattern is getting breakout, and the support somewhere around we are seeing is 123 or 128. So at current market price or any dips towards 140 would be the great buy. Keep strict stop loss of 100. If 100 is not getting broken out, then we can expect price target of 220, 240 in short time. So definitely you can go long on 24,000 call, but on dip, not at current market price.
Okay, fine. Please keep this one on your radar. This looks really, really interesting on the charts. And without a doubt, today's star is the IT index, led very ably by Infosys, which is now heading towards its all-time high. Remember, 1950 is the all-time high of Infosys. Let us see how it moves. It's the top contributing stock to Nifty's uptick, bringing in 32 points. Bharti Airtel is bringing in 18 points. Reliance is bringing in 15 points in the green, and TCS 11. The only laggard, ladies and gentlemen, is HDFC Bank. Even if HDFC Bank flattens out, you will see a very, very strong move coming on the Nifty, which has tested its 21 EMA. At the moment, 24,522. Keep the 24,500 Nifty call expiring on August 1st on your radar. Sakshi.
Okay, Mayuresh, we'll take the last word from you. From here on, for the next 6 months, till the time we see the next budget, where do you think the outperformance in the markets will lie?
Selective pockets within infra. So, pre-engineering buildings, wastewater management, selective road companies, selective FMCG stocks, because domestic consumption will come back very, very strongly. You've seen a very strong monsoon play out so far. Being sanguine in terms of large cap IT, but not the right time. I think the next quarter numbers, I think there will be opportunities in that space as well. And logistics as a space as well. So I think these are spaces where I think the government intent will continue to grow at a fast clip. And therefore, where accelerated investments will happen, which will be backed by earnings going forward, should be something on your radar. Even energy to a certain extent, both thermal as well as renewables selectively. This space with the kind of accelerated investment that I spoke about, that can come through, can have a huge amplified effect as far as orders and numbers are.
All right. Okay. We'll keep an eye out on all of those pockets. Thank you so much, Mayuresh. Always a pleasure to host you with us with all those wonderful insights that you have to share with all our viewers. Meanwhile, viewers, all the 50 stocks on the Nifty are into the green after 3 days of that rout in the markets, knee-jerk reaction, negative sentiment, you may call it, as far as the budget reaction is concerned. And this, I have not seen this for a long time on the Nifty. All 50 stocks on the Nifty are into the green right now. 0.5% uptake on the Nifty, 24,523. It's now at the day's high point again, and these are the stocks that are buzzing in trade. Your sense, Kiranji, where would you look?
Overall market you are asking, right?
Yeah, overall markets, where are you keeping your focus in the stocks?
So stock specific. So as we discussed in the morning, also 24,500, 24,600 would be the supply zone for the Nifty. So be a little bit cautious. But stock specific movement can be we can see very rapidly happening. Nifty IT, it's dealing the stores today. But apart from that, Nifty Metal, which you also highlighted. So Nifty Metal is one of the sector which we are liking as of now at current market price. Being Nifty Metal is forming a bullish reversal candlesticks pattern on daily price chart on support of 100 days moving average. So within the Nifty Metal, we are liking JSW Steel, which we are already discussed. Another sector which we are liking is Nifty Realty stock. Reality in Nifty Reality, Prestige Estates looks very good. And I just wanted to highlight one stock which we discussed in the early morning, which is Bajaj Finance. We discussed Bajaj Finance somewhere around 66.50, 66.80. Now the
Right.
stock price is trading above 6,700. So keep eye on Bajaj Finance. Keep go long. Even at current market price, anyone would like to go long, they can go long. It is a contra trade. But looking at the chart setup of daily price chart, a bullish harmonic pattern is there. We can see bullish candlesticks pattern reversal is also there on momentum indicator. Bullish hidden divergence is also there. So multiple bullish symptoms we are seeing on Bajaj Finance. So definitely Bajaj Finance in our top pick for coming months also. And we are expecting price target of 7,000, 7,000 plus in very short time. So Bajaj Finance would be the stock of the day.
Bajaj Finance will be the stock on the day. Remember, very few stocks which are below 200-day average within the Nifty, and sadly, Bajaj Finance is one of them. But this is where the beauty of stock picking lies. You buy pain when the quality of the balance sheet is assured. At about 6,500, Bajaj Finance was the lowest since early June, but this is the first day of the FNO expiry for the month of August. So let's see how this one pans out. On June 19th, the high for the counter was 7,400. Let's hope we see better days on Bajaj Finance, and that is the view that is coming in from Kiranji. TCS at about 4,386. Is this a record high? Let me just check. Yes, ladies and gentlemen, you have a record high on TCS. Kiranji, would you want to chase this momentum?
So looking at TCS price chart, the stock price is trading its all-time high, definitely. So on monthly chart, on weekly chart, it's all-time high pattern breakout. But on daily price chart, we can see some cup and handle pattern breakout is also there. So for chasing this momentum, definitely can be chased. You can keep a very strict stop loss of 4,200. So risk reward ratio looks very attractive. Keep strict stop loss of 4,200 and go long on TCS. We can expect price target of at least 5,000. But for this particular kind of a target price, you have to wait for at least 6 to 7 months. So if you are okay to hold for 6 to 7 months, you can go and chase this particular price chart, price momentum. Keep strict stop loss of 4,200.
Okay, Kiranji, what we will do is we will be showing live visuals. Yes, Shail. Please continue, Shail.
No. Let's get to Prime Minister Modi. I think that's a far better visual than TCS's earlier high. Let's shift to that. No issues.
Modi is leading the nation in celebrations on Vijay Divas, paying homage to the martyrs of Kargil war. 25 years of Kargil Vijay Divas, viewers, and you can see Prime Minister Modi right there at Kargil. He's visiting Kargil War Memorial on the occasion of 25th Kargil Vijay Divas. He paid homage to the brave hearts who made the supreme sacrifice in the line of duty. Remember, India had lost 545 soldiers in the high-altitude battlefield when Pakistan encroached into Indian territory in the spring of 1999. Operation Vijay, the Indian effort to eject the intruders, went on the entire summer. Later, he will also be carrying out the first blast of the Shinkunla Tunnel project virtually as well. But viewers, you can see live visuals coming on your screens right there as Prime Minister Narendra Modi is paying homage to the brave hearts who made that supreme sacrifice in the line of duty in the 1999 Kargil War.
And once again, the entire team of Business Today offers its deep respect to the Indian Armed Forces, including the Navy and the Air Force, which played a stellar role in pushing back the insurgents and the Pakistani army regulars that had come into Indian territory. The Indian Air Force operation was called Safed Sagar, and if you ever have time, do read about it on the markets. Let's get back to where action is, and that's in TCS, a record high. And Sakshi, there's a digit change in Eicher Motors, now above 5,000 rupees. This counter is also in the thick of trade, trading about 123 rupees higher. Kiranji, before we let you go, what are the charts of Eicher Motors telling you for the medium term?
So coming back to the entire auto sector, let's discuss. In the overall Nifty auto, it is into a very bullish trend. We are seeing that, and recently, whatever the corrections happened, that is the only consolidation, and from that consolidation, we are already seeing a very sharp move on Tata Motor. Now, Eicher Motor is one more stock. Looking at current market price or looking at the current juncture, the Eicher Motor given a big consolidation from 5,000 level to 4,600 level during this price correction or type correction. We are seeing that prices has taken a support of 20 days and 50 days moving average, and now the stock price is giving a breakout also. So at current market price, anyone would go long. They can go long on Eicher Motor, keep strict stop loss of 4,900. And looking at the price corrections or a time correction, the consolidation size is 400. So definitely we can expect the price target of 5,400 in short time. So Eicher Motor can go long.
Okay, so there are 6 record highs on the market within the Nifty today. Eicher Motors that we've just discussed, along with Tata Motors. These are the two from the auto pack, largest commercial vehicles player, as also the super heavyweight in the two-wheeler space. Then you have a record high on TCS, which we've just discussed. Of course, ONGC is going great guns. And you have two stocks, Sun Pharma and SBI Life. Actually, SBI Life came up with a very strong set of earnings, and that has done a remarkable job as far as SBI Life is concerned. Let me show you a very interesting data on the top gainers as far as SBI Life is concerned. Month to date, SBI Life in the month of July is up 15%. So keep an eye out on this. Record highs in FNO, apart from the ones that we've mentioned on the Nifty, are about 4 plus 4, 8 plus 5, 13. And there is a smattering of pharma stocks. Zydus Life 1209, Sun Pharma I've just mentioned 1676, Granules India 1.5% higher 560, and of course new additions being Petronet LNG, new additions being India Cements 364. So that's how it is, Sakshi. What's on your plate? Look at BHEL 315. This is really interesting.
Right. In fact, we'll also ask Kiran ji on the entire PSU pack, which we have not discussed. Stocks like BHL, which are spiking 1.1% higher, and the entire space right there. What looks positive to you?
So overall PSU sector again getting buzz. During budget or a post budget, we see some price correction is happening, but now again is getting back into its previous trend. So BHEL, let's discuss BHEL. So BHEL into consolidation zone still we can see that, but on daily price chart there is some bullish reversal candlesticks pattern is already formed. The stop loss based on percentages looks very big, but on price terms it's maybe very small. So at current market price, anyone would like to go long on BHEL, they can go long, keep strict stop loss below 300, and looking at price chart, we can expect price target of 340, 350 in short time. So in PSU, but as we discussed about the energy sector also, so PSU energy, Coal India looks very good at current market price. If you look at the Coal India price chart, the stock price into the consolidation zone since last long time. February 2024 price made a high of 500 rupees, and from that level price never crossed this 500 level. Now it is above 500 level, took multiple support of 100 days, 50 days and 20 days moving average. The momentum indicator is also getting back into the bullish zone also. So Coal India looks very promising at current market price. One can go long on Coal India, keep very strict stop loss of 480, 490, and we can expect price target of 540, 550 in short time. So definitely Coal India looks very good.
India also looks very good at this point in time. It's the mid-cap space that's been rallying sharply, 1.4% higher in trade. Within the mid-caps, do you have a choice of stocks that can still be taken in right now? Kiranji, where would you keep your focus?
There is the one company, whether it is in mid cap or large cap, it is in between that. So that is Paytm. So Paytm, if you remember, we discussed somewhere around 400, 350, 400 level. From that level, it is at 460 level. So current market price, if you look at the price is already above its 20, 50 and 100 days moving average. If you consider 100 days moving average, so November 2023 broken out is 100 days moving average, and after almost 8 months, the stock back above its 100 days moving average. Momentum indicator is also in bullish zone. So PTM looks very good at current market price. You can go long, keep strict stop loss below 440. And we can expect price target of 500 plus in very short time. Another mid-cap stock, it is a footwear stock. I just wanted to highlight with sales are that Bata India. Bata India, we discussed somewhere around 1400 and now it is 1600. So at current market price, it's a fresh breakout was also there. So Bata India, it's also a promising stock. Any dips toward 1570, 1580 would be the great buy. Keep strict stop loss below 1500 and we can expect price target of 1800 in very short while.
Okay, got that. Well, it's time to now start to wrap the trade in the morning edition. We are actually looking at the markets pretty in a good shape, Shail, and it just took 2.5 days, I would say, for the markets to recover and come back with a 24,500 is already with us now. Only remains for the Nifty Bank, and that's also now just down by about 0.2% at 50,748. We do hope now this green stays through the course of the new series also, Shail.
Yes, actually, I think there shouldn't be any problem on Nifty. We'll see it scaling back to 24,800 probably somewhere in the middle of August. The only point of concern is now banking stocks, and there has been an acknowledgement from the top players that now you need to do something critical for people like you and me to get back into fixed deposits. Kiranji, of course, gets a lot of money from the cash market, the futures market, so he's not concerned about making gains on fixed deposits. But for people like you and me, I think there is an acknowledgement from the banking sector that fixed deposit holders have been taken for a very long ride. You cannot take money from Sakshi and me at 4.5%, on which we pay 33% tax on interest, and then hope to give that to industrialists, to borrowers who will make money on top of the interest that they pay to the bank. So that kind of dichotomy is ending, and that's the reason why Sakshi, the bank Nifty is much below 21 EMA. It goes on to show that the market is understanding that this battle for fixed deposits will hit net interest margins in the longer term, and that's the reason why I am not very bullish on the banking space, especially the private sector banking space. Public sector banking space, we've made enough and more money in the last 24 months, so they are going through a pause, and I believe still the PSU banking franchise on fixed deposits is far stronger than the private sector banking franchise on fixed deposits. So with that, ladies and gentlemen, we hope to get a better traction in the market. Remember, 24,500 Nifty call expiring on August 1st. We picked it up somewhere like 155, 153 rupees. The index as of now is at days high, comfortably above 24,527. Sakshi and I will return at 2:30 and take a stock of what the market has done for us.
With that, viewers, thank you so much for tuning in onto this very special edition, and thank you, Kiran, for staying during the course of this edition and helping all our viewers as well. Viewers, 141 points higher, 24,550 on your screens now on the Nifty, and we'll continue to get you all the action on the markets through the course of the day. Thank you so much for tuning in. The entire leather footwear stocks, those are all buzzing in trade. There is even Metro Brands, Red Tape, the Sri Leathers. The entire space is now up and about. Anything that looks positive to you?
So amongst this space, I would like to go out with Bata, because this is one stock which really hadn't performed. If you look at the stock was in for consolidation, really not showing much of an up move. And now the stock has really